Let me now bring on board Harinder Kumar, Head of Institutional Broking with Elara Cap. Harinder, good morning. Thank you for joining us. Harinder, traders may call this market as boring, range-bound and predictable, but the bottom line here is that despite global odds, benchmark indices are holding on. Nifty has, or bulls have managed to defend that mark of 5100 on the Nifty, even though the news environment has been tough. Suddenly markets are falling less and they're gaining more.
Yeah, actually, if you look at it, the Nifty setup is quite interesting. If 50% of the Nifty is at a 52-week high and the 50% at a 52-week low, and the 52-week low stocks are also quite oversold, and it's quite concentrated, the holding. If you look at the promoter institutional holding, it is in the hand of probably 8 to 10 institutions, including the promoters. So our guess is, that the market is so oversold and the rest is so strong that the capitulation from here on, even if the news is extremely bad, is unlikely. And actually that is what the market is sensing and it's holding on. So our guess is that the Nifty bottom closer to 4,700 4,800 will be maintained, and it's unlikely to be breached even if there is bad news on the Europe front. So the trading zone gets protected, and I think a time comes when you start looking at cherry picking some of the stocks. I think that is what you are seeing in the Nifty today.
Harinder, what about the entire power ancillary space, the likes of Tata Power, Reliance Infrastructure, REC as well as PFC? Any names that you would go bullish on, considering a lot is happening now with the power space in terms of action? We just saw the Delhi power tariff hike as well coming in.
Yeah, so there are attempts to correct the anomalies that have existed in the structure, but it will take some time before this corrects itself out. So there are not only issues on tariffs, there are issues on terms of coal, repricing the tariffs in terms of ultra mega power projects, in terms of clearances. So there are a host of issues in terms of the power sector, and so I think it will take some time to correct itself out. So no attractive picks at this given point of time.
Harinder, what do you think happened with Tata Motors yesterday? What's the growing concern now?
Okay, so the concern is that the market is always circumspect on the luxury car sales, which is actually the primary driver of Tata Motors stocks today. So the domestic business is not so material for investors, and I think there have been some downgrades of luxury car makers globally. But our view would be slightly different from here. I think the 30,000 unit sales of Jaguar and Land Rover will continue, and the stock price is sustained. But yes, it's become too volatile given the ambiguity of the car sales, passenger car sales in India, and the continuing doubt over whether global luxury car sales will sustain. But our guess is that in a couple of more months, if the trend sustains and the numbers are revalidated, the stock could bounce back. Yeah, till such time it's going to remain volatile.
Harinder, but in general, is it time to avoid autos? Ashok Leyland, Tata Motors, Maruti and now Bosch. Auto companies have cut production. Progress of monsoon this year poor. Base effect has kicked in and the competition only has intensified.
I would tend to agree with you, Nikunj, here, absolutely. If you is reminiscent of previous down cycles, where the first negative news in terms of cutting of production, in terms of clearing inventory at the dealer level, and that is the first news flow that we already started seeing. So my guess will be the first victim would be the four-wheeler stocks and not necessarily the two-wheelers. So the two-wheelers will see some amount of convergence in terms of investors flocking to these Hero, Honda and Bajaj Auto, but the four-wheelers will turn extremely vulnerable given the interest rate scenario and the current news flow that we are seeing. And given that the industry is very cyclical and there's a first signs that the industry growth rate is tapering off, I would be a little wary about the next 2-3 months in terms of the overall sales volume growth.
Harinder, is it a good time to stay away from telcos because of the negative news flow on the space?
Yeah, actually telecom will take around 6 months more to bottom out till the 2G licensing whole issue gets resolved. So at the moment there are only two trading bets, that is Bharti and Idea, between which investors keep shifting their positions. As such, there is no structural longs in the telecom space as of today.
So Harinder, what is on your watch list from the small cap space, from the mid cap space and from the large cap space? 3 ideas.
Actually, Nikunj, continuing from what you spoke about mid-tier banks, the 3 other interesting banks that come to our mind are City Union Bank, Dina Bank, and Jammu and Kashmir Bank. I think the setup in these stocks is also very, very attractive, and they're showing great, return ratios and business opportunities. So we would also look at this space quite, interestingly. The other thing is, we just released a note on how the infrastructure stocks have bottomed out. From January to year to date, they outperformed the indices, and some of these stocks like Nagarjuna Construction, etc., have started returning, in terms of stock performance. So that primarily means that it's not a dead cat bounce. There are some improvement in order book, and valuation catch-up might happening. So I guess there could be some opportunities there as well.
Are construction stocks, Harendra, high risk, high return ideas, or you are pretty reasonable that irrespective of the market mood, construction stocks or some of the asset owners, the names you mentioned, they could be up by 50% in next 1 year?
Yeah, so one is on the core improvement in business recovery, if potentially there is one case. Second is, investors are looking to add a little bit of beta to their portfolios. And if you expect the rate cycle to turn potentially next year, even by 100 bps, some of the infrastructure stocks could turn net positive, and that could actually make the stocks move up dramatically. So I think rather than going for the larger infrastructure plays who have huge debt leverage, the smaller ones are likely to turn positive much faster. There are the opportunities in that space as well.